I give a great probability of gold being far higher than $5,000 an ounce, unless they manage to do this soft landing thing and everything keeps on going the way it's going. And then somewhere under $3,000 an ounce, but above where it is today is a reasonable guess if Hi, and welcome to the new year. This is the beginning of this year, but is it also the beginning of the end? Alan Hibbard has the what's coming in this year and a little bit of a look back at last year. So, Alan, what have you got for me?
Hey, thanks, Mike. Happy New Year. Yeah, so basically I want to gather a bunch of price predictions for gold for the end of 2024. And a lot of these analyst predictions were actually gathered by Brandon, who writes our Nuggets newsletter. And I think he's going to write an article next week. So if anyone wants to read that article, definitely go to goldsilver.com and sign up for the newsletter. But what I have today is I want to go through 3 different batches of what's happening in the economy, what's happening with the retail investor, what are they doing, what's happening with banks, and then what's happening with geopolitics, and see where the price of gold could go by the end of 2024. So first of all, the first thing I want to look at is something that's on everyone's mind. It's the Fed likely cutting interest rates 4 times next year as the economy remains resilient. This is just too funny. It's so dystopian. If the economy
they're contradictory terms. If they're cutting rates, it's because the economy is crappy. That's the reason.
Yes, if the economy is resilient, you can raise rates. So
exactly.
Yeah. So anyways, that's kind of funny. But of course, when the Fed cuts rates, that's usually bullish for gold. So that's one thing that's happening.
It's also bullish for real estate and the stock markets.
Yeah, so, exactly. It just sort of inflates a lot of asset prices.
Yeah.
Another thing, Federal Reserve officials are worried you're getting paid too much. So this, if you get paid too much, you might go spend more, and that's going to contribute to inflation. And allegedly, they're trying to keep inflation down. So they want you broke and not spending anything.
Right. So it doesn't cause the inflation, but what they have done is stolen a bunch of wealth from the poor and middle class and transferred it into the financial sector. So the richest people got a lot richer. And so now they don't want you catching up because that might stoke inflation. They want you drowning at all times with the water like right up to here.
Exactly. But you might, so these are the experts that manage the economy, but what about the experts that you go to for individual financial advice? Certainly they're helping, aren't they? No. 71% of advisors have 0%, 0 to 1% exposure to gold. Look at this. And none of them have 10% or more. And probably this is what they're recommending to individuals. It's very hard to recommend to somebody something other than what you're doing yourself. So I have to imagine that there are not very many people who own gold.
Yeah, well, if you look at all the financial advisors, they're representing things that you can easily buy off of brokerage exchanges. So you go to your brokerage platform, and if people start recommending gold, you can't go down to a local stock shop and buy stocks, but you can go to a local coin shop and buy gold. And so the public may or may not be buying their gold through a broker. And so it behooves all the brokers to keep people out of gold.
Yeah, exactly. And to your point, Mike, a lot of individual retail investors are going to seek out gold from any place they can get it. And we saw Costco actually selling $100 million worth of gold in its first quarter. This came just a few weeks ago, and the 1 ounce bars typically sell out within a few hours, according to the CFO. So yeah, retail investors are gobbling it up. And then shortly thereafter, we had Walmart doing a very similar thing. So you can just go to walmart.com and buy gold and silver. It's amazing. I'm sure that's a hot commodity at Walmart, just as it is at Costco.
I do want to remind everybody, however, that these places aren't making a two-way market. So if you can buy it from them, but when it comes time to sell, to whom do you sell?
Exactly.
Also, they aren't providing like vault storage at Brinks like we do. They do not have a program like InstaVault, where you've got the lowest prices and it's just instantly being able to trade in and out of it. And it's all insured in a vault. And so this does show, though, that the public is now becoming aware, and those brokerage houses have not yet jumped on the bandwagon, but just like the very end of 79 through, like, by the time 1980, 82 rolled around and gold had already peaked, all the financial advisors back then in the 80s, that in the 70s, that were telling you not to put any gold in your portfolio, and they were dead wrong, now said, oh, you need like 25%. And by 4 or 5 years later, it was 10%, because it was going down from 600 down to 400. And then by the time it reached 250, you shouldn't have any gold in your portfolio. Gold is dangerous. You don't want to touch gold. So nobody was recommending it when I started buying it, when you should be buying it. So
yeah,
let's move on.
It's all right. Yeah, that's investing in the rear view mirror, and it doesn't work very well. You got to invest looking forward.
Right. But this shows that the public is now rushing in. We're entering the third phase of this bull market, which is the biggest gains and the shortest amount of time.
Exactly. So how high could it go? Well, according to a few analysts at some of the major banks like Goldman, UBS, Bank of America, and so forth, they're predicting the sort of underwhelming range of 2,100 to 2,400 for next year, which isn't that exciting. One of them even is bearish, $1,900 an ounce. That's the World Bank. So maybe they know something we don't. Maybe they're expecting some kind of deflation. I don't know. But this is, I guess, what you'd expect from banks. They can't predict anything that's too outrageous.
The World Bank has factors. The World Bank has a vested interest in lower gold prices. The other banks that are predicting prices, they have to be conservative. If they get too bullish on gold, then, I mean, all of these banks that are writing newsletters, Bank of America and Goldman and everybody else, they've got a brokerage arm. Bank of America has Merrill. And so if they start talking about gold, just like I said, you can walk out the door and walk down to your local coin shop and buy gold, or you can get online and buy it from us. And so they have a vested interest in not being too bullish. But take a look at the trajectory after the crisis of 08. You can see where the dip is there in 08 and the angle of that thing. And I just think that the most bullish bank there is probably sort of, and then your latest price prediction from the end of the data line to that is about the same angle as coming out of the 08 crisis. So I think that bank might, I don't know. Let's move on.
Yeah, we'll see. We'll see. They, not only one person could really be right if they all have different prices. So anyways, that was the first batch. Let's look at the second batch. I just want to remind people that last year, 3 U.S. banks collapsed in the same week: Silvergate, Silicon Valley Bank, and Signature. And then some other banks followed. And the FDIC had to go to extreme measures to try to insure all those deposits. Normally, it only insures 250,000, and they, went to some unprecedented lengths in order to increase the amount of deposits that they were insuring, because they only had $100 billion in funds to do it. And total bank deposits, by the way, in America are approaching 10 trillion. So 10 trillion compared to 100 billion. So the FDIC, as a standard operating procedure, only has enough funds to cover about 1% of bank deposits in America. Not 100%, not 10%, 1%. Right. And this is like a policy move. This is like normal for basically any insurance company. So if there's small problems, quote unquote, maybe they could insure the deposits. But if there's big problems, there's no way they can.
Well, if there's big problems, then the great taking comes into play. There is a reason, it's a shame that the book, The Great Taking, was written from a conspiracy theorist point of view. It doesn't matter if it's a conspiracy or not. All that matters is that every one of these regulations and laws are already in place. And so they've prepared for, if there is this crisis and bad outcome, then the great taking comes true, regardless of whether it was planned or not.
Yeah, exactly.
So and this is the reason. This only 1%. Well, what is plan B if 1% doesn't work out? Plan B is the great taking.
Yeah, not fun, not fun.
Right.
And I think some of the banks, national banks, are hip to this. And that's actually the next thing I want to talk about. The Dutch central bank admits it is prepared for a new gold standard. You and I talked about this in a previous video. This came back in November. And yeah, there's a whole article here about the head of the Dutch central bank just explaining, yeah, we're preparing for a new gold standard. And, if there is a crisis, official gold reserves can be used to underpin a new gold standard. So that's happening. And it's not just one country, it's all over the Eurozone. A chart that comes from this article is basically all the countries of the Eurozone buying and selling gold to match their reserves in line with their own GDP. So you can see the black bar here, which is GDP, is very close to the height of the gold bar, which is the monetary gold reserves. And this green portion is actually them selling gold since the 1990s. So since the 1990s. So this is decades in the works of lining this up, preparing for a gold standard, which could come about any day. And you can see that it's pretty consistent, the height of the black bar with the height of the gold bar. Everything's leveling out. What are your thoughts, Mike?
Well, there's two different scales on this chart. So I just want to point out to everybody, many, many times I've said that gold standards suck because it's a way of cheating. Gold is great if we used gold, but they're planning on some reserve ratio where they're printing a bunch of currency and it's only partially backed by gold. People do not realize that the US dollar, the paper dollars that exist, the Federal Reserve notes, are backed by gold to the tune of 0.4 cents per dollar, and it's on the Fed's balance sheet. And so, so that is a 0.4% reserve against it's not, before the Federal Reserve, it was 100% reserve ratio on Treasury notes. When the Federal Reserve was established, it was a 40%. Now we've gone from 40%, not to 4%, but to 0.4%. So anyway, this is they're trying to balance this so that as an emergency maneuver, they can go back to a gold standard. But what is going to happen to the free market price of gold? Because this is just another voodoo fractional reserve scheme.
Yes, exactly. And that, to your point, is why some individual analysts who can afford to be more authentic in their predictions are predicting $3,000 or $3,400 per ounce of gold by the end of next year. And one of these is Ronnie Stoffel. I'll show his exact prediction in just a second. But yeah, these are some individuals, whereas this previous cluster we showed were the banks that couldn't really say something that was too far, too sensational, basically.
Right. They don't want to move people out of the stocks and bonds that they hold, that they're getting all their commissions on. It's a brokerage house.
Exactly.
So they don't want you taking your cash out or taking your investments out of their brokerage house and going down to a coin shop or coming to us.
Exactly. So, okay. So that was the second batch of predictions that I wanted to show. Now, finally, I want to move into geopolitics because, as you know, 2024 is an election year in the United States, and we do have all kinds of chaos and turmoil happening globally. Russia, Ukraine is still a thing. Obviously, we have a lot of action in the Middle East. And we just found out that the BRICS has doubled in size, inviting in new members, five new members. So, of course, we know Brazil, Russia, India, China, South Africa, so spanning multiple continents. And they just added Saudi Arabia, Iran, the UAE, Ethiopia, and Egypt. And go ahead.
Well, somebody needs to have a lot of fun and come up with a new acronym because it's no longer the BRICS.
Exactly.
Right?
Yeah,
you got all these extra letters to play with now. So let's see in the comments the most creative acronym for this new association of countries.
Exactly. And it better be 10 letters long at least. So
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, goldsilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making goldsilver.com your dealer, and now back to the video.
Yeah, and an interesting thing to note. So as all these different alliances and allegiances take shape, an interesting thing here is that Argentina was invited, okay, but Javier Milei, who took office in December, said that he wants to steer his country's foreign policy away from China and Brazil, saying, "Our geopolitical alignment is with the United States and Israel. We are not going to ally with communists." So this is kind of a big statement. It's certainly ideological, and we can see that we're forming teams. Basically, the countries of the world are forming teams. They're getting more divisive and clear cut in who they're going to ally with and who they're not. A lot of chaos. A lot of chaos.
Yeah, I wish he had just decided to go his own way instead of aligning himself with the East or the West. But it's I suppose, a better statement than saying he is going with China and so on. I mean, I'm not a fan of socialism or authoritarianism, and the East is so most of the BRICS countries are fairly authoritarian, and I think it's just horrible when they're in an authoritarian country. The population is very oppressed, and it's not like we are exactly free, but we're freer than they are. So
yeah, absolutely. Yeah. Well, speaking of us, I do want to get back to the U.S. for a second, because we do have an election in 2024, and it's no secret that the former President Trump is currently facing 91 felony indictments, and he's been banned off of 2 state ballots already, and now that ballot fight is headed to the Supreme Court. It really doesn't get any bigger than this. I mean, I can't imagine going to a higher level. I mean, it doesn't get to a higher level than the Supreme Court and a former president. I mean, there's nobody higher than a former president who could face 91 felony indictments.
Right.
It could be over 100 by the time we finish this video. I don't know. I mean, they're coming left and right.
How did we become such a banana republic? And why is it that the best that we can come up with, the choice that we are given now, is between Trump and Biden? And if Trump wins, will he be administering his administration? Will he be doing that from jail? Because it's entirely possible that he could be president in jail, running the country from a cell. I mean, how did we become such a banana republic? This is insane.
My best answer is it's the monetary system.
Yeah, it is. It does go back. It's all economics and the monetary system, right?
Yeah. Well, so anyway, speaking of the election and the tumult that may result, there's an article here that's 2 years old. Okay, it's 2 years old, but there's a retired general warning that the U.S. military could back a coup after the 2024 election. And so that's a retired general, right? He's obviously well connected. He has certain access to intelligence that you and I don't have. Who knows if there's merit to that or not? But anyways, if anyone wants to figure out what his reasons are, I encourage you to read this article. You can find it at NPR. And similarly, so this is the military backing the coup after the election.
I haven't listened to this podcast, but I've heard that this comes from sort of a deep state, more conspiracy theory angle. Yeah.
Okay. So put a pause on that. So that's after the election. There's also a U.S. Army Colonel Douglas McGregor who doesn't believe that there will even be an election. He thinks that something is going to happen before the election that will prevent it from taking place. And he also predicts a difficult financial situation in which banks will remain closed for several weeks. So I would encourage people to.
I have listened to this one, And this comes from like the opposite end. So you've got both of these military people predicting some sort of chaos going all the way from martial law to a complete coup. This is, I mean, I opened up this video. Well, is this just the beginning of this year, or is it also the beginning of the end? Well, when it comes to like the stock markets and so on, we'll discuss this in another video, but I think that this is sort of the beginning of the end when it comes to big gains to be made in the stock market, unless we go into some sort of melt up because we're in currency printing mode, QE forever.
That's right. Yeah, exactly. And to top it all off, right, with all those things happening, the U.S. national debt just hit a record $34 trillion a couple days ago. I mean, I can't try counting to 34 trillion. You know how many lifetimes it would take you to count to 30? This is such a huge number, and there's no end in sight. This thing is growing like a weed. I don't know. I don't know.
Yeah, it's really turned into a flood, and the irresponsibility. This is the most, out of all of these things that are happening, even the potential of nuclear. I mean, the world is like on this knife's edge where we're so close. It's been since the Cuban Missile Crisis that we've been this close to nuclear war, but this is more dangerous than the nuclear war. It's more dangerous than the coup in the country, because this is what is responsible for all of this stuff. And then all of our politicians are going to try and solve the problem with more of what caused the problem. So you got cancer. The cure is we're going to give you another kind of cancer.
Yeah, it really is bizarre, but that's what they've been doing. Yeah, exactly. Right. So with all of those factors combined, I want to return to the price predictions.
Before you leave, we took a look a little while ago at where the national debt was at the end of 2019. So in the last 2020, 2021, 2022, 2023, 4 years. And it's gone up, what did we say, about 50%, I believe?
Yeah, about 50%.
50% in just 4 years. Totally insane. So 4 years from now, if we go 50% more, we're adding 17 trillion to this. I'm not that good at math. What is that?
It would be 51 trillion. 51 trillion.
Right. And then what is the interest due on that if we're up? I mean, this is insane. And then with the spending, the Congressional Budget Office and the Government Accountability Office, our Government Accountability Office is basically saying that we are really nearing this Medicare, Medicaid crisis. So all of these things are converging. This is going to be a tragedy, and we're going to be going into what I have been calling for many years, the Bernanke bust. And Bernanke won a Nobel Prize for what I believe, if you look back, if you go 5 years in the future, 10 years in the future, you'll find that Bernanke won the Nobel Prize for destroying the monetary system.
Yeah, absolutely. So all of these factors are combining in the favor of gold, obviously. And the final prediction I want to add to this chart here comes up at $5,000 an ounce. That comes from Robert Kiyosaki. So this is kind of the range of prices that I was able to find. Yeah. And this is just for 1 year. This is just for 1 year. This isn't even looking out 3, 4, 5 years or more. This is for 1 year, the end of 2024. Any thoughts on this, Mike? And do you want to add your own prediction?
Yeah. Well, I really do think that the energy that is stored up, and we've done many videos on this, of the all the bubbles, the real estate bubble and the stock market bubble, especially because those haven't popped. Bonds are already deflating because of the changes in interest rates. But that energy that is stored up means that there is probably a big crash coming with whatever the next crisis is. And earlier in the video, you were showing the the banking crisis from March, April of this year. Well, that is actually part of the 2008 global financial crisis. We've done these videos showing that that crisis never ended. Yeah, they were able to slap some Band-Aids on the stock market and pump these bubbles bigger. But we've shown these videos where all of these actions that the Federal Reserve is doing, instead of just dialing one thing on the economy to try and heat it up, slow it down, now they're flipping things off and on in emergency maneuvers like light switches. We just did that video a little while ago. And so the crisis has never ended. That banking crisis is the second phase of the global financial crisis of 2008, but that's just a tiny little crack compared to what is coming. And I think that it's probably in 2024. So I give a great probability of gold being far higher than $5,000 an ounce, unless they manage to do this soft landing thing and everything keeps on going the way it's going. And then somewhere under $3,000 an ounce, but above where it is today is a reasonable guess. If all the way into 2025, everything just goes nice and smoothly and there's no crisis. And, you know, you had said like there are small crises like March, April, these things. But if Credit Suisse, if they hadn't arranged that shotgun wedding with UBS, that would have really drugged down the world economy. That would have caused a global financial crisis, you know, because that's a systemic risk, that bank. And it just shows that if Credit Suisse, I mean, I don't know how old that bank is, but this is a bank that's been around like forever. And if they can actually end up going under because of because of all the leverage and the danger in the system, then it just shows how risky everything is. And then when you pile all these bubbles on top of it, and the Federal Reserve doing these emergency maneuvers, switching everything on and off like light switches, I just think we're on at this. I think 2024 is the year. You know, there's a chapter in the book, The Point of No Return, and I think 2024 is the year where we see this. You know, they talk about the Fed pivot. Well, this is the whole economic monetary pivot. And so I think we're in potentially for some tough times, except for some of the people that are in alternative assets. I think that some cryptos might do really well, and I think gold and silver will do really well.
Yeah, the only thing I'll add to that is, you know, gold is functioning as an insurance policy in the context of everything that we're talking about.
Yeah.
So there's kind of two questions. It's like, where do we think gold is going to go, and where do we want it to go? So like, I only want gold to do like 10% next year. That's all I want, because that means like everything's okay in the world.
Exactly.
But like, I'm not rooting for gold to go to $5,000 an ounce, because that means that like things fell apart in the world, and there's like there's going to be a lot of people dying as a result of, you know, homelessness and starvation and war. I don't want that. You know, unfortunately, it's outside of my control, and you know, it's an insurance policy, and it's just like if you have fire insurance on your house, you're not rooting to cash in on that policy, even if it would give you more money than the house was worth. Like,
exactly.
You don't want your house to burn down. So it's tough. It's tough to sit here and say, like, well, where do we think the price is going to go? Because I don't really want it to go off the charts, you know, but you know, if things fall apart, it will. So
I think that if we do have this type of crisis, that Robert Kiyosaki's prediction could be low. And I think that it would probably continue accelerating for, you know, it won't just stop at the end of 2024. So these price predictions are somewhere on the road to even far higher prices in 2025, 2026.
Exactly. I totally agree. Well, let me just finish up real quickly and put everything that we just looked at on a log chart so you can see the percentage moves. And if we compare it to 1970, look how massive these percentage increases were compared to where some of these dots are. They look like relatively small on a percentage basis. And I will just remind people, back in 1979, the price of gold doubled in a year, more than doubled. It went from 226 to over 500, which is more than double. So conceivably, we could go from 2,000 to 4,000 in a year, conceivably, and that wouldn't be unprecedented.
Oh, in 79, but then in the next, it was on around the 19th or 20th of January that it peaked, which is like I don't know, 12 or 14 trading days. Mm-hmm. In the next 12 or 14 trading days, it had an intraday high of 873.
Exactly. Yeah. So it closed 1979 at 512. And then in the next 21 days, which to your point is a smaller number of trading days, but in under 3 weeks, it went from 512 to 873. So after just doubling in a year. So these percentage moves are massive, and certainly it could outstrip pretty much all these predictions that we just looked at.
Yeah.
So last thing is all these predictions, in case anyone wants to see them, here's where they come from. And unfortunately, this isn't sorted. I apologize for that. But these are the sources of all the predictions. So you can pause the video, take a look at those. And these were compiled by Brandon, who writes our Nuggets newsletter. So if you want to see his upcoming article on this, sign up for the Nuggets newsletter. I believe he will publish that article next week.
Yeah, and go to goldsilver.com. Just put your email address and you'll get the newsletter every week.
Perfect. And I want to finish with a meme. We talked about buying gold as an insurance policy. You can also buy silver. Okay, you can buy silver. And this is me leaving the coin shop before they realized I gave them paper for silver.
Awesome. That is great. Yes. Okay. Thank you. And I want to thank everybody for watching. Hit that like, subscribe, and hit that notification bell. We'll see you next time, Alan. Thanks.
Thanks.